Means this question was included. Now I don't know whether this type of question will come or not. But MRQ to just write down must revise question, because this type of questions require revision before exam. Question number 69. What is given? An entity has following three types of interest in an associate: equity share, 25% equity shares to which equity method of accounting is applied; preference shares, non-cumulative preference shares that form part of net investment in the associate. It is given which form part of net investment in the associate, means for which settlement is not planned. Such preference shares are measured at fair value as per IND AS 109. Long-term loan, the loan carrying interest at a rate of 10% per annum. The interest income is received at the end of each year. Long-term loan is accounted as per amortized cost as per IND AS 109. This loan form part of net investment in the associate. Now one doubt may come. The doubt is, sir, how can we apply amortized cost method? How can we apply amortized cost method? Because if you want to apply amortized cost method, what we want? The life is required. Life means what? When the amount is payable, that is required. अरे बोलना रे. For amortized cost you require EIR. For EIR what is required? When the principal amount will be repaid, that is required now. And for this, so what is given? Settlement is not planned. So if you, I don't know whether you have remembered or not, we have done one question under IND AS 109 where the life was not known. So in that case we have estimated life. So in this case management will estimate at what point of time it may be redeemed. On the based on that expectation, EIR will be calculated. Understood? But for this question that is not required, because they have given what? Amortized cost method, means we are not supposed to find out a carrying amount as per IND AS 109 for this question. Are you able to understand what I am saying? But if you want to calculate amortized cost as per IND AS 109, you want life now. Life is not known because settlement is not planned. So we need to estimate at what point of time you are expecting to redeem it. Are you able to understand? But it is not planned. It is not planned. Are you able to understand? Do you want me to identify that question whatever we have done under IND AS 109? Are bol yes or no? Do you want me to identify that question whether we have done or not? Are bol yes or no? You have forgotten, but I am not forgotten. Let us see whether we have done or not. Let's see. Come to which chapter? IND AS 109. Where is IND AS 109? Oh my god. Let me find out. Hmm. Where is that question? Let me find out. Question of financial asset. Yeah. Where is that question? Question 29. Super expected evidence. Means I have done in class. It means I have done in class. What was the point number 3? If you read the entire question, the said loan is interest free and will be repaid as and when YK has fund to repay the loan amount. Means settlement is not planned. Understood? We have done one question of this nature. In that, what we have done? Check करेंगे. Point number 3. Point number 3. I have read also this special point. General loan which is repayable when the funds are available cannot be stated as loan repayable on demand. This is not loan repayable on demand, because when you are saying loan repayable on demand, then it is recognized at unamortized cost. Sorry, it is recognized at undiscounted amount. But here we will do discounting. Correct? Rather, the entity need to estimate the repayment date and determine its measurement according by applying the concept prescribed in scenario 2. Means just you need to remeasure the estimated date of repayment, and then whatever we have done in scenario 2, that will be applied. Means calculate ER and then proceed. We have done similar type of question, that I want to say. Correct? So this is question number 29, point number 3. So can I write down here for your understanding? Refer question number 29 of financial instrument chapter, point number 3, so that you can just go through what we have done. Understood what I want to say? Question number 29, point number 3 of financial instrument chapter. Of financial instrument chapter, okay? Yes, sir. Now, at the start of year 1, the carrying value of each of the above interest is as follows: 10 lakh, 5 lakh, 3 lakh. So this is as per Ind AS 28. This is as per Ind AS 109. Following tables summarize the changes in the fair value of preference shares as per Ind AS 109, and impairment loss on long-term loan as per Ind AS 109, and entities sharing profit or loss associate for the year 1 to 5. So what they have given, check करेंगे year 1, 2, 3, 4, 5, they have given increase or decrease in the fair value of preference shares as per Ind AS 109. So it might happen these preference shares are accounted as FBTPL or FBTOCI, that is not given. But if it is FBTPL or FBTOCI, it will be subsequently measured fair value, and any gain or loss will be transferred to PL or OCI as the case may be. It is not given whether PL or OCI, but they have given there is some fair value changes. So of course we need to account for that fair value changes. Similarly, impairment loss reversal on long-term loan as per Ind AS 109. So if it is a loan, we need to apply the requirement of impairment loss as per Ind AS 109. So there can be some impairment loss as per Ind AS 109. Then entities sharing profit or loss of associate. This is sharing profit or loss of associate. This is as the requirement of Ind AS 28. So these are two requirement of Ind AS 109. My question to you all, for preference shares and long-term loan, first we will apply Ind AS 109. If first we will apply Ind AS 28. First Ind AS 109 means every year, first we will find out a carrying amount as per Ind AS 109. Then if required, we will apply the requirement as given under Ind AS 28. Correct? Throughout year 1 to year 5, there has been no objective evidence of impairment in the net investment in the associate. What they are saying ki net investment in associate will not be impaired as per the requirement of Ind AS 36. As per the requirement of Ind AS 36. The entity does not have any legal or constructive obligation to share the loss of associate beyond the interest in the associate. This point also we have done. You remember? In the last class we have done this point. Remember? See, there is no legal or constructive obligation, therefore there is no need to recognize this as a liability. If there is a legal or constructive obligation to bear such loss, then we need to recognize the liability also for this. So what they are saying, the entity does not have any legal or constructive obligation to share the loss of associate beyond its interest in the associate. Means this is only the loss they need to bear. Correct? Yes, sir. Based on above, determine the closing balance of each of the above interest at the end of each year. So year 1, let us start with the year 1. Year 1, type of the interest: equity share, preferential, long term. Opening balance given 10 lakh, 5 lakh, 3 lakh. Understood? Now first we'll apply Ind AS 109, Ind AS 28, Ind AS 109. So adjustment as per Ind AS 109. So what they have said, 50,000, 50,000, minus 50, minus 50. For loan, minus 50. For preference shares also minus 50. You can see they have given minus 50, minus 50. Got it? Then balance after applying Ind AS 109, 10 lakh, 4 lakh, 50, 2 lakh 50. Correct? Understood? This much have you understood? So this is carrying amount after application of Ind AS 109. Now we'll find out a share of loss. What is the share of loss? 16 lakh. My question to you, the 16 lakh will be allocated first to equity shareholders, ki preference shareholders, ki loan. We know the hierarchy of loss. So this loss will be allocated first to which party? Suppose, just try to understand, this is what a company, correct? And this company is liquidated, but the first payment will be done to whom? Hierarchy of payment, na? First payment will be done to debenture holders, preference holders, or equity holders. Debenture holders, then preference holders, then equity holders, correct? Correct. Now suppose their amount is what, 3 lakh. Debenture holders will get 3 lakh, preference holders will get 5 lakh, and equity holders will get 10 lakh, correct? Understood? Now there is a deficiency of 16 lakh, but this loss will be first borne by whom? Equity. The maximum loss will be borne by whom? Equity holders. So we'll say 10 lakh. Can I say equity holders not bear any loss beyond this what? Paid up capital? I hope you are understanding this. They will not get anything. Now there is a deficiency of 16 lakh. So this 6 lakh will be borne by whom? After this balance 6 lakh will be borne by whom? Preference holders or debenture holder on pro rata basis. First preference holders. Preference holder, debenture holders will bear the loss on pro rata basis. First, the entire loss will be borne by whom? You only said the repayment hierarchy, na? First, debenture holders, if there is any surplus amount, first will pay to whom? Debenture holder. Then to whom? Preference holder. Then to whom? So, loss will be first borne by whom? Equity holder. Then balance loss will be borne by whom? Preference holder. Then whatever loss is left, that is borne by whom? Debenture holders. Means out of 16 lakh, 10 lakh is absorbed by whom? The balance 5 lakh will be absorbed by whom? And balance 1 lakh will be absorbed by whom? This is the hierarchy. Same thing is given here. This 16 lakh, you can see 16 lakh, 10 lakh will be first allocated to whom? Equity shareholders. Then out of balance 6 lakh will then allocate to whom? Preference holder, but to the extent of their carrying amount 4 lakh 50,000. Then balance 6 lakh minus 4 lakh 50, how much left? 1 lakh 50 will be allocated to whom? The other loans and receivable. So long term loan is what? 1 lakh 50,000. You can see now closing balance at the end of year will be 0 and 1 lakh. Have you understood? To this point, whatever we have done, this is as per what? Ind AS 28. Got it? Ind AS 28 says this. Have you understood this point? Have you understood this point? It means, can I say, in the year my entire loss of 16 lakh is recognized? Why entire loss is recognized? Because share of loss means the carrying amount of net investment is not nil right now. Means if the carrying amount of investment become nil, then we will not recognize any further loss. So this question is the combination of two concepts. Combination of two concepts we are doing. One, post acquisition loss, whatever we have done in last class, and today we have done long term interest, which is in substance a part of net investment in associate or joint venture. Got it? Then coming to year 2. Can I see year 2 opening balance is 001 lakh? But the first will apply Ind AS 109 to Ind AS 28. 109. Let's see what they have given. Ind AS 109. Year 2, once again the fair value decline is how much? 50,000, and here nothing. Correct. So in preference years we'll do minus 50,000 and 0. This you understood. And for long term loan 0. So what will be balance after applying Ind AS 109? It is minus 50,000 and long term loan 1 lakh. Have you understood up to this? But the question is that whether preference shares means investment in preference shares of associate or joint venture, whether it can be minus 50,000. It become minus 50 now. You just check. We are doing minus 50 now. Whether it is correct, not correct. It means what they want to say, कि whatever loss which was allocated to preference shares in prior year will be now reversed, so that it becomes 0. Because can I say this investment in preference shares as per Ind AS 109 it should be 0. Why it become negative? Why it become negative? Because in year 1 how much loss was allocated? 4,50,000. Are you able to understand? But can I say if their value becomes 0, then how they will allocate, how they will absorb the loss? Are you able to understand? Means can I say if I say year 1 and year 2 in combined, if you think year 1 and year 2 combined, so what is the value of investment in preference here? 5 lakh minus 50 minus 50. So 5 lakh minus 1 lakh. So carrying amount is 4 lakh na. So how much loss can be allocated? Only 4 lakh. But in last year how much loss we have allocated? 4 lakh 50,000. It means out of 4 lakh 50,000 how much we should reverse? 50,000 will be reversed. Therefore what they are saying, share in profit or loss of associate, this 50,000 will be reversed. Means you can see what is the total loss of second year, 2 lakh. This 2 lakh will be entirely allocated to what? Long term receivable only. So you can see we can allocate to the long term loan only to the extent of what? 1 lakh. But can you say preference shares negative will now become positive? Means it should be now nil. Therefore 50,000 will be reversed. Means can I say out of 2 lakh loss of current year, share of loss of current year, we have only recognized 50,000. Bolo yes or no? Because what? 1 lakh minus 50,000 positive means we have recognized only what? 50,000. So how much share of loss remain unrecognized? 1 lakh 50,000. So share of loss which remain unrecognized is 1 lakh 50,000. Share of loss which is recognized in second year is 50,000. And you can see the investment become nil. The total net investment in associate or joint venture become nil. Have you understood second year? Second year understood? Only I'm explaining. I don't know whether this type of question will come or not. Have you understood this point? Bolo. Got it? Means can I conclude that out of total loss of 2 lakh, loss of only 50,000 recognized, hence there is an unrecognized loss to the extent of 1 lakh 50,000 at the end of year 2. Got it? Let us come to year 3. Can we come to year 3? Have you understood this much? Bada? Or I will explain 1 second. 1 second. Have you understood year 1? Acha, if I will do in writing, now you will understand. I will do in writing. Year 2, let us do in writing. Because once we read na, nahi chalta hai dimag. Year 2 I am doing. But we have equity shares, preference shares and loan. What is the closing balance? Nil and 1 lakh. But first we apply Ind AS 109 requirement. You don't write. You don't write. Because only year 2 I will write down. Just listen now. But the first will apply Ind AS 109. As per Ind AS 109, this to nothing. This is 50,000 nil. Sorry, 50,000 negative decline. And this is no impairment loss. It means as per Ind AS 109, this is nil. Means this is as per Ind AS 28. Preference here will become 50,000 negative. And this will remain 1 lakh. Now the question is that whether any investment can become negative. Whether any investment can become negative. Whether any investment can become a negative. No, it become negative. Why? Because last year we have allocated a loss of 4,50,000 to investment in preferences. But can I say we should allocate only 4 lakh? Because if you combine year 1 and year 2, just think about year 1 and year 2. The opening balance was 5 lakh, then minus 50, then minus 50. The closing balance as per Ind AS 109 become how much? 4 lakh. Means they can absorb how much loss? They cannot absorb more than 4 lakh. Na? It means the loss which was allocated in the last year in excess of 4 lakh should be reversed. Understood? So to that amount we will reverse it. So this 50,000 will be reversed, correct? And now this will become 0. This is the 0 only. Now what is the share in loss in second year? Share in loss in second year as per the question, 2 lakh. This 2 lakh will be allocated to which party? Equity share, preference or loan? To the extent of 1 lakh. So this become 1 lakh negative. Now you are able to understand. This becomes 0. So what is the total loss which has been allocated? 1 lakh, and this 50,000 reverse now. It means 50,000 is only allocated. Means out of 2 lakh how much is recognized and how much is not recognized? 1 lakh 50,000 not recognized. Now understood. Now understood. So when we are writing, then we are what? Understanding. Therefore, maximum question I do in writing. Normally when we read now, 50% so we don't understand. You think you are understanding, but actually we are not understanding. Now I think you have understood. So writing always helps. Writing always helps. Correct? Now year 3, year 4, year 5 you will understand nothing complication in that. Year 2 have you understood? Now year 3, year 4. देखो 000 opening balance of year 3. Now what they have given, check करेंगे. First India 109. They are saying now increase in 1 lakh and reversal of previous impairment loss of 50,000. For loan there is a reversal of previous impairment loss of rupees 50,000. So 1 lakh will be added and 50,000 will be added. Yes sir. So can I say in this case 1 lakh added, 50,000 added. Now closing balance become 1 lakh 50, 0, 1 lakh and 50,000. Now what was the share in loss of third year? 0. But what is unrecognized loss? So that will be also allocated. But the 1 lakh 50,000 will be allocated first to equity share button, then to what? Preference share to the extent of, then to what? 50,000 to the extent of 50,000. It becomes 0. Got it? Understood. Now coming to fourth year, once again 0 opening balance. Now as per Ind AS 109 what they have given, check करेंगे. It is 50,000 increase, but this is 0. So 50,000, let us increase it. Not applicable, 50,000 0. So closing balance after Ind AS 109 0, 50,000 and 0. Now what is share of profit? Share of profit 10 lakh. But the first will be allocated to which party? Reverse na loan to the extent of their interest, mean to the extent of their opening carrying amount. So what was the opening carrying amount? 3 lakh. So we cannot allocate more than this because this is the amount which is payable. Will not pay more than this amount. Nah. Surplus is always payable to which party? Equity shareholders, but not to preference shareholders, not to debenture holders or loan holders. Correct? Yes, sir. Now, uh, how much we can allocate to this preference shareholder to the extent of previous carrying amount, which is now become, so only to the extent of 5 lakh. 5 lakh. So 5 lakh, 3 lakh. What is remaining balance? 2 lakh will be allocated to which party? Equity shareholders. And you can see now the balance become 2 lakh, 5 lakh 50 and 3 lakh. Last year you can understand by your own. Check karo last year. You can do by your own. Last year 2 lakh, 5 lakh, 53 lakh. There is an adjustment as per Ind AS 109 to preference shareholders. It become 2 lakh, 5 lakh, 83 lakh. What is the profit? But the entirely will be allocated to which party? Surplus only to what? Equity shareholders. 10 lakh means 10 lakh plus 2 lakh, 12 lakh. Now I hope you have understood. Now one doubt will come, sir. Sir, loan, you said amortized cost. So sir, every year the amortized cost will change for loan. One doubt will come. Right now the doubt will not come. When you read by your own, then doubt will come. Loan is at an amortized cost, na? So sir, is carrying amount at every year end will change? Amortized cost will change, na? But can I say if EIR and contractual rate of interest are same, then can I say opening balance and closing balance of that loan will remain same? It means in the given question it is assumed that ER is equal to what? 10%. Are you able to understand? So that note I think they have given the interest accrual on long term loan would be done in each year at 10% per annum, means it is assumed that it is equal to EIR. Contractual rate of interest and EIR are same. This will be done without taking into account any adjustment done in the carrying value of long term loan as per Ind AS 28. Hence the entity will accrue interest of 30,000 in each year. So they have just given one information that accrual of interest and the receipt of interest are same, and therefore amortized cost will remain same as the opening balance. Got it? Yes, sir. I hope understood. So just can you write down? First, let us read. It is noted that certain requirement of Ind AS 28 also apply to such long-term interest, like allocating share in loss of associate or joint venture to such interest and testing for impairment and recording of impairment loss on the net investment in the associate or joint venture. Means when I am saying testing for impairment, so this testing is as per which Ind AS? Ind AS 36. Ind AS 36. So whatever impairment loss will be there, this impairment loss will be also allocated in the form of hierarchy, in the order of hierarchy. Just write down, refer which question? Question number 69. Without this question, this para you will not understand. I hope now that this para is, you have understood what they want to say. Correct. However, entities should first apply Ind AS 109 to those interests and then apply Ind AS 28 to the balance remaining after applying Ind AS 109. This also you have understood. These two para you have understood. Correct. Got it. I don't know whether this is important or not important from examination point. But when I say net investment associate or joint venture, net investment associate or joint venture means what? Investment in equity instrument as per Ind AS 28 plus the receivable or payable as per Ind AS 29 for which settlement is not planned. So whenever we say net investment, you have understood what we want to refer. Same thing I will once again repeat this entire discussion under Ind AS 21 foreign exchange. So that time I will not once again discuss each and every point. Correct? Yes, sir.